My video about earnings really sparked an interest for me in looking at Sleep Number here. I was looking at Sleep Number. I was taking a nap last night. Most people just call it sleep whenever it's sleeping at night, but I'm going to call it a nap. Laying in my piece of garbage brick bed, and I was like, wow, I was talking about Sleep Number. I was dreaming about Sleep Number all night. All night. I just had that up and down arrow in my head the entire night, thinking, what could life be like if I had a Sleep Number? I'll never find out because I'm not going to spend that much money, but that begs the question, what about Sleep Number stock, right? What's going on here? Because they reported earnings after market Tuesday, so we're going to go ahead and take a look at it. Currently up 5% after hours. Would you look at that? So my question is, what is going on here? Why is this the case? It got me looking historically at the stock, which normally if I'm looking historically, I'm going to look at the 5-year chart traditionally, which 5-year chart looks pretty okay, up 117% 5-year. It's not anything fantastic. You see these dips here where, at one point after a year, you would have been down 26% and then stagnant pretty well after, a year and a half, or 2 years that is. But other than that, it's an interesting one. Definitely seems to have been on a tear as of 2017 onward. That's really where you're seeing a lot of that growth, 132% since then. Really stagnant from 2015 and 2017, but over the past 3 years at least, it's looked pretty good, right? So what's going on here? We'll look at the max life of the stock too, and I'm not sure what led to some of these. This stock traded. It was a penny stock at one point. Down 90% from IPO. Lost all the value, and since then really just up 230% since 1998. It's not good in my opinion, but let's take a look at the stock. Let's take a look. First, we get news, on the 9th saying that there's a new bull. Raymond James lifts the bed manufacturer to outperform rating from Market Perform. I know they say everyone loves Raymond, but I don't love this Raymond. He's an analyst. How am I supposed to love him? I don't even know the guy. It's just ridiculous. Everyone's supposed to love Raymond. But they reported earnings, and guess what? EPS beat of 15 cents per share, and revenue of, that's right, 12.72 million beat. It's up 14% year over year. What scares me, which, look, obviously great reaction from earnings here. I hadn't looked into the revenue this company makes, and I don't know if I'm personally in the same boat, but as everyone else. But let's take a look. Obviously, market cap of 1.37 billion. Nothing absurd there, if we're looking at that. But I think valuation is a question for me. If it's a company that's not pulling in 500 million a quarter, obviously that's good revenue. Close to 2 billion a year in revenue. It's not absurd, but stock price seems a little bit high for that. I'm not saying that there's anything crazy with that. Obviously there's a lot of companies trading high, but from a valuation standpoint, actually, if I'm looking at it, it really doesn't look that absurd. There's not that many shares outstanding really either. So that's a thing to note here. Pretty good earnings per share, about $1 a share made. So I don't know. I guess they're going off an annual here, but forward PE of 16 is pretty fair valued. If I'm looking just off this quarter, obviously that PE ratio is not accurate in my opinion. This is a $46 stock with a EPS of $1, so I think that could be pretty accurate if an overall annual EPS is somewhere around, probably around $2, $2.50 maybe. That valuation seems pretty fair. So there's nothing absurd there. Double-digit comp sales growth, certainly interesting, especially because they were flat a year ago. And flat a year ago, I mean, if we're looking 5 years out, you can kind of see where that flatness went. I mean, the whole year was pretty well flat trading for this stock. So clearly not much growth historically there. Gross margin increase, which is pretty good. Definitely that's looking good. And again, that full year EPS guidance of 245 to 275. Nothing insane, but they're expecting a 10% growth in net sales. That's not awful. I'll get into some of the numbers more specifically on the company in just a bit, but if we're looking, what is Sleep Number? Obviously, you've probably seen commercials about it. That's uncomfortable. I don't like feet. They make beds, mattresses specifically. They make bedding, pillows, bed frames, all sorts of things. And their main point to go at is their Sleep IQ, which senses your sleeping movements and adjusts your mattress in your sleep accordingly. It's meant for, two people have different interest and taste on what mattresses they like. Some people like a softer mattress, some people like a more firm mattress, and this is supposed to be able to adjust mid-sleep to that. It's interesting. I know a lot of people that really, really like these mattresses. My concern regarding this specific company would be, pricing. So the cheapest Sleep Number obviously starts at $1,000, which I personally am under the opinion. Obviously, mattress is not something you skimp out on. Mattress is something you spend a good majority of your life on. Think about it. Over a fourth of your life is spent on a mattress, traditionally. So you probably want something that's good. I mean, in my case, I sleep about freaking 4 hours a night. So, and I'm not blaming my mattress. That's just my sleep schedule. So, but I would like a good mattress to enjoy those hours, if I were me. But most expensively though, you get somewhere around upwards of $5,000 for a mattress. I don't know, who's gonna buy that personally. But obviously they have a 100-night free trial, risk-free trial that is. So in case you don't like it. It's a lot of money to spend on a mattress. So the question becomes, is this a recession-proof business model? It's a company that's been around for a long while, right? So obviously you can make that determination. But what I'm looking for is it a company that's going to grow during recession, because I don't want to invest in a company that's not going to see growth. And if we're looking historically, let's just go back to 2016 here. 2009, 2008. Look, that's scary. Is it not scary? If you're looking through the lens at recession, I mean, yikes! 3 years total down 15. At one point, this thing was down to another penny stock due to recession fears. I mean, I don't want to take too much for it, and even in 2000, I don't want to look that far into it, but I am looking that far into it because people aren't going to be purchasing those super expensive mattresses during recessions unless they have that money. It's simply not the case. And that's where I find that concern at. I don't think it's necessarily a recession-proof model. I think, and I hate to say we're due for a recession, but when we hit a recession, this is not a business model that's going to be growing. This is a company that's going to take hits in sales pretty significantly. And if that's the case, it's a stock I don't really want to be in, because you'll see a very big reflection in the stock price. If they're, down 2 years in sales, well, shoot, people are going to be selling out of the stock and it's going to go down again. And they don't pay a dividend either. They're not a dividend-paying company. So I just don't necessarily see this a company with minimal growth. I don't know if I'm necessarily going to be purchasing this. We're looking at metrics, obviously. I think the PE ratio looks nice. Price to sales, very fair. But There are some concerns here, specifically on the balance sheet here. If we're looking balance sheet, obviously here revenue of 1.6 billion years, 1.6 billion per trailing 12 months over the year, total cash of 1.68 million. Really, that's concerning, and total debt of 630 million. That's slightly concerning. I mean, why don't they have any cash on hand? It makes you think, where in the world did the cash go? Um, if we're looking historically too here, um, you can certainly see a steady pattern of growth, which is interesting. Obviously, we want to see a pattern of growth. But where I find concern, though, would be, I mean, this net income line isn't that impressive. They're not making that much money, and they have debt built up. It's a concern, obviously. I hate to say that, but I don't like companies with a lot of debt, and especially not with more debt than what they own in cash. And this company doesn't have much cash. If they're trailing 12 months has a net income here of 74 million, it's questionable. 74 million over a year when you've got 600 million in debt. It's just a concern for me. I don't know about you, but it's going to be hard for them to pay out their debt if they don't have any cash on hand. That's my opinion on the matter. Sleep Number is not something I'm getting involved with. I had to look into it after I talked about it, and looking into it, I personally would not invest in this stock. If I were you, I think recession can hurt this stock a lot. Stock price can go down. Maybe if that's the case, if this stock does get hammered pretty hard, you can go ahead and get involved. But right now, I don't know if I necessarily would. Despite the after hours move. Don't be fooled. I don't trust this as a growth stock, and they don't pay dividends, so get me out. That's all I got for you. I'm going to go sleep well on my break mattress. I'm not going to worry about, getting a Sleep Number.